So I found this group early in the year called Tardus. Their whole idea is to help you build an income snowball. And they literally have a US patent on this calculator that they use in order to do that. I was really intrigued by that when I heard about them. I started to learn about them. I actually was able to attend and speak at one of their events, actually in Hawaii earlier this year. But long story short, I absolutely signed up for their program. I was really intrigued. And what they do is they encourage you to invest in these short-term principal and interest-backed amortized loans. And so I've been doing peer-to-peer lending for a while. They encouraged me to use some different platforms than I was familiar with, but okay. So I've done it, and it's been 30 days now. It's been 1 month, and I want to kind of report. So me and my coach, this gentleman that I'm working with through their company, decided that we were going to start with about $13,500. So we put $13,500 in a peer-to-peer lending platform with some strategy behind it. So what we did is we kept our contribution limits to each note very low, literally $25 or $50. And so at the end of like a month, it honestly took about that long to get all $13,500 deployed, but I had over 500 notes. And those notes start kicking back. I did that in August, so those notes started kicking back all of September, but I've gotten about like somewhere between $450 and $500 sent back to me. And the original idea is you take any extra cash flow that you have, any extra dollars, and you use it to pay off where you got the $13,500 from. Then each month that you get this $400, $500 coming back, you also use that to pay off the $13,500, which you can do, you can keep it. There's a lot of different ways you can do it. But the whole idea is we're gonna pay off the $13,500 really fast, like within 4 or 5 months. And then you're going to rinse and repeat the system, right? You're just gonna do it again. And so what ends up happening after a year or 2 years is you've done this transaction 8 times, 9 times, 10 times. You literally have like $4,000 coming back your direction every single month. Now here's the key. Some of that's gonna fall off because we're buying short-term notes, so like 3 years. So some of that's gonna fall off in a year, but you're just gonna keep the process going. And the idea is you can build up your income snowball so big that eventually what you'll be able to do is take some of that income snowball and live off of it. Or take some of, maybe the $13,500 starts to increase as you get more money, right? So you increase it from $13,500 to $15,000, from $15,000 to $20,000, to $20,000 to $25,000, which again, just perpetually keeps your income, your snowball going. And I was really intrigued by them. So I've started the process. They told me it's not about how much you can put in and dump in, it's about how often you can go. Because what you want is this income stream that doesn't end up having cliffs in the future. 3 years from now, I don't want a big drop off because I had so much going and then it ended or whatever. So I really like that. Anyway, just kind of giving you the update. I'll throw some screenshots in here, and if you've got questions about it, put a comment, I guess, and I'll reach out to you and kind of talk to you about it. Or if you've got questions about obviously where I took the money from in order to fund this, put that in the comments as well. But peace.